We got to go over the homework. Um, like I said, people did pretty good. Um, People still was doing their own thing, and then we're gonna go through some setups so y'all can get a better understanding of high probability demand only, and then we'll go through the new material. The new material is just an add-on to what we already know, so it's just gonna help you to make to choose if you want to take this high probability supply and demand, especially on Euro USD and GBP USD. It's a reason why I trade those two pairs. But let's just get into this homework. So okay, let's just check this one right here because this is the first one I wanted to check. So right here, why is this wrong right here? Like, I don't know if y'all can see this. He understand gaps, but the entry is wrong. So if it's a gap right here, if it breaks out and it comes back, why would you enter over here? This would be considered a low probability. It would be high if he entered over here for us a buy, but if he enter a buy over here, that's low probability. It already got tapped into. That's not high probability because like if you can zoom in a little bit, well, I don't know if you can zoom in, but like it had aggressive buying coming out this area and it came back into it. When it came back into it, that's the entry right there, not over here. You doing like unless he was marking up this one, but he didn't mark up this one right here. He marked up the demand right here, so that made it low probability. That's wrong. You know what I'm saying? Like no. We're just gonna go through some, most of them that are wrong, honestly, because we know what looked good. So this one is wrong because they didn't mark up the complete box. Like I mean the candle. This is the candle that you got to mark up. They only marked up just a little bit of it. Like they got the low of it, but not the high of it. We got to mark up the entire candle. Like make sure y'all get the entire candle marked up. Okay, that's right. I just want to go to people that got it wrong. Let's see. What is this? Oh yeah, this is for sure wrong. Okay, so this is wrong right here because if you see this green wick. Hey, do I got a question? What if they're high probability on a 15-minute and 5-minute? Which time frame we taking? You only take the time frame that you trading off of. So if it's a high probability supply and demand on a 15-minute, only trade the 15-minute chart. Like don't try to do both. Like just pick one. If you like the 15-minute, if it's like you can just see setups more cleaner, then just rock with the 15-minute chart. But if you want to do the 5-minute, just rock with the 5-minute chart. Don't do both because you're gonna get confused. Okay, so this setup right here, this is low probability because look at this green wick right here. It wicked out of it and then came right back into the box. High probability supply and demand do not supposed to look like that at all. Like at all. It's supposed to be a big green candle coming out of that area and then coming back. Okay. And also I want to talk about some setups where it's high probability, but it's only two candles. I don't like those setups. I'm gonna try to find that today. You may see two candles that create a supply or demand, right? And it tap back into that demand, but it's only two candles. I don't really like those type of setups. Now don't get me wrong, those can win, but I don't like the two candle high probability setups. I just don't like it. I don't. Let's go to some more setups. uh that's right. Yeah, most of y'all was understanding this stuff, not gonna lie. Y'all do gotta understand though, when it do tap the bottom of the supply and demand box, it's invalid. I mean the demand box, the bottom of the demand box is invalid. Like if it taps the bottom of it, the trade is over with. Don't even consider it no more. Even if it take off, like I'm just saying, like some of y'all took that GU trade, what was that, Friday? No. You know what I'm saying? Like I wouldn't have took that. Like, I mean, some of y'all did win off of it, but it already tapped the bottom of that demand box. If it tapped the bottom of it, I'm erasing it. That's why I didn't trade EU on Friday. And this was a good ass week, by the way. I ain't gonna lie. Okay, now this right here, I know for a fact this lady is new right here. This is support. She's drawing up support and calling it demand. Completely wrong. And I understand because she just knew. But this right here, this is just regular, just support right here. This is just regular support right here. Okay. She did it again. She just drawn off the wicks, but the wicks, that's just how we draw support and resistance. My fault. This is not demand right here. This is not demand. And this is resistance too. Hold on. Yeah, yeah. Lex, you just you gotta just go through the course again. This is another one. Y'all drawn out your box as if it's low probability when we got a gap literally right here. If it's a gap right there, you're gonna want to draw your box smaller on that last down candle before it pushed up. And if you would have lined that up, it would have never touched it. So this is not even valid because it never touched it. I need a better entry off of my markup. Yeah. Okay. I'm not going through ones that's right. Yeah, people that got it right, y'all know what y'all doing. I ain't gonna lie. Okay, that look good. Let me see. Okay, so this is another. Okay, y'all see this setup right here, right? If this is the man, if that it's a red candle, it's a down candle, and then it pushed out. When it came back into it right there, and then you bought those type of setups, I don't really like. I'm not gonna lie, it's not enough, in my opinion. It's not enough aggressive buying. Like that's just me just trading a candle that taps back into it and then going up. I don't like setups like that. I needed to get away from that area and then come back. If it came out of it, like if you following the rules, like I teach on the course, it is following the rules. But is this really aggressive buying? Like, you get what I'm saying? Like, is this really aggressive buying? I don't like setups like this. It got a gap off of this little candle, then tap right back into it, and then went up. I'm just no, I don't no. Isn't that already filled? Let me go back to it. No, like you got to play out the candle. So if it blasts out of it, that candle become a gap. You get what I'm saying? This candle became a gap, if that makes sense. So this is the last down candle. It pushed up, that candle left the gap. Then it filled it in with that little hammer right there, that little red candle, tap back into it, and then you could have bought right here. Now, that's following the rules, but is that really demand though? Like, you know what I'm saying? Like that's not demand. That's just you trading gaps. Like you're just trading gaps. Like that's not no momentum. Yeah, there is no momentum. What if it's a big momentum candle? Yeah, if it's a big momentum candle coming out of that area and then it come back, yes, that is demand. But this right here, that's just a little candle coming out of it, and then it's just tapping back into that last red candle. No, no, that's not demand. That's not demand. Now, don't get me wrong. Like I have seen this play out. I'm not taking that. I'm just keeping it a buck. I'm not taking that. So if y'all take that setup and y'all lose, I'm not preaching that. Like that's just not what I'm, you know what I'm saying? I'm not doing that. When you say that you should wait the candle to break above, you mean to wait the 5 minute period to end? No, when I mean for the candle to break above once, let me see right here. Okay, so this is a high probability demand. It blasts out of it. When it blasts out of that area, it came right back into that area. This little candle right here, if it as soon as it come back into that area, if it break above this candle right here, that's when we get in. That's when we get in. You get what I'm saying? So I don't mean like, oh, wait for the candle to close, then buy. And there is a buy limit that people do use. Like I do appreciate that too. If you want to just wait until it tap right back into it, you can just instantly buy once it tap back into that box. I don't preach that though, because if it do blast through it, you instantly lost. Like it's just an instant L. You know what I'm saying? How can we aim for high probability gaps in liquidity? I mean, I just trade supply and demand, and any supply and demand that got gaps attached to it, I just trade that. I don't just trade liquidity unless it's off of support and liquidity is being grabbed. Like whatever is happening in the market, I'm just reacting to it. So if it's a liquidity grab on support, that's just me trading support. Now you may consider that a liquidity grab, but I'm just keeping everything in simple terms. So market orders are always your go-to. Yeah, absolutely. Wherever is aggressive buying and selling, or wherever I see a liquidity grab mixed with support or resistance, that's what I'm taking every time. Um, so we got aggressive buying coming out of this area. It came back into it. As soon as it break above this little candle right here, we're buying. Okay, we're buying. All right, I'm gonna go through some more incorrect homework, and then I'm gonna just show you some setups on my chart. Are you gonna post this webinar later? Yeah, I am. Every week I'm gonna post my webinar. Every week. This is good. This is good. Who is this? That's good. Okay, where's all the wrong homework at? See, that's what I'm saying. Like everybody was doing pretty good. Like, not gonna lie, like everybody's doing good. Okay, here we got some wrong homework. Okay, that's right. Okay, this is wrong. This is wrong because it never tapped into it. It never tapped into it. So if it don't tap into it, don't just be eager because it's leaving you. That's not your setup. Like you got to be disciplined. So if it don't touch into that zone, it's over with. There is no trade. Look at another pair. That's just what it is. This gonna happen sometimes where you be anticipating it to touch into your box and it never do and it leave you. You didn't lose no money. That's all that matters. When you go over your charts, can you explain the gap again for me? All right, I got you. I got you. All right, let's go on my charts. Okay, let's go on my charts. I already gave y'all on the review. For people that didn't check homework, you just did your own thing, bro. Like, come on, like I'm checking this homework and y'all just doing your own thing. Yep, that's right too. Left a little gap, never tapped into it until it came all the way back here, and then we buy, and it took off. All right, let's go to um this right here. Okay, so you want me to explain gaps one more time? Okay, who understand gaps in the chat? Because like once you understand gaps, then you understand where high probability is at. Who understand gaps? You think you do. I got them now. Me, I do. I don't. I understand. There I go. Okay, really like 95% of y'all do. There's like a couple few that don't understand gaps. Definitely got a better understanding going over the homework. Okay. I'm gonna go through like a couple of cells with the gaps, and I'm gonna get to this new material because I'm telling you, when you mix it, yeah, I'm gonna just go through this new material right after this. So let me just do the replay mode because it's always gonna make sense in real time. That's a good add-on video. Yeah, I'm gonna make that add-on video to the course with gaps. Okay, so okay, perfect, right here. So gaps, replay. So gaps is always you're gonna want to look to the right. Look at a candle and see if it's a pullback. So right here, this is a gap. Now this is a gap because this next candle only pulled back halfway. Now if this wick came all the way down here, that would be considered filled. So that wouldn't be a gap in the market. You get what I'm saying? So you gotta look at candles looking to the right hand side. This right here, because I seen some of y'all was doing this, that's not a gap. This right here, that's not a gap. That candle right there, that's not a gap in the market. That's not a gap in the market. Even if you do the replay mode, that's not a gap in the market. That's not a gap in the market. It has to be something like this. You see how there's nothing on the right hand side of it, and looking left of it is nothing either. Like it has to be no price action on the right hand side, mainly the right hand side, but looking left, that's not a gap either. So like right here, this down up candle, if you look at these two candles, that's not a gap in the market. That's not a gap in the market. I'm gonna replay this right here because that's gonna make more sense. Let me see. I just want a clean setup so we could just okay right here. Yep, that's a clean one right there. All right, so if you're looking at, always look at current price. So current price right here, we have an engulfing right there. Your demand box will literally be just like this. Will be just like that. Oh shit, my fault. It would be just like that. Let me zoom in so everybody can see this. If you're waiting on this, this is valid. Like this is a valid demand. Now, why is this high probability right here? It's high probability because we have a gap from this candle right there to that last down candle. That's a gap in the market. Looking left and right. You know what I'm saying? Like looking to the left, you have price action, but looking to the right, there is no information. So if there's no information on the right hand side, that's a gap in the market. This right here is not a gap. I want to make that very clear. That little price action, just because I didn't dip back into it, doesn't mean that that's a gap. No, that's not a gap. This right here, that's a gap until it filled it back in. Until it filled it back in, that was a gap. And replay it just so that can make more sense. Go to the right hand side of it. That's a gap in the market until it filled it back in. You get what I'm saying? This right here, that's not a gap. Okay. I hope this making sense though, because this is some new stuff that a lot of people don't really understand when spotting high probability supply and demand. Like you got to really know what's a gap and what's not a gap, because you start trading stuff that's not even there. You know what I'm saying? So I see another. Well, no, that's actually low probability. Okay. Find some good setups. What is this, UJ? I do not look at this. What is this? I don't really like this pair. UJ, I'm about to just get rid of you because you piss me off. Okay, here go one right here. Yep, that's a little small one. Okay, so let's do a replay mode. So right here, if you're looking at current price, remember, look at current price and look below too. Look below. So if you're having a hard time debating, like, okay, is it going to reject from this area or is it going to reject from this area? First of all, mark up both high probability supply and demand. Like, mark them both up because they're both here. So all we're doing is just waiting on a reaction. We're not trying to predict moves. We're not doing that. That's why we wait for candles to break. When you use buy limits and sell limits, you're basically saying, I'm trying to predict this move. I'm trying to get the most sniper's entry possible, which ain't nothing wrong with that. Like, if you want to do a buy limit on the top of this candle, yeah, you can do that. But if you just want to move with the market, waiting for candles to break, that's the confirmation. You know what I'm saying? That's the confirmation. So right here, we got a gap in between. We got a gap in between here and here. And we have a gap between here and here. That what makes both of these high probability demand. So what we gonna wait on? We're gonna wait for a reaction. We're not trying to, you know what I'm saying? We're gonna wait for candles to break and we're gonna get in. So it comes close and decides to go away from it. Comes back into it. Now it finally comes back into it. When it comes back into it, that's entry right there. Soon as it break that candle, we getting in, stop loss somewhere under here. Now you got stopped out. That's gonna happen for sure. It's gonna happen. It happens to me all the time. I get stopped out, then I win. So you lost right there, and then you have to get right back in right here to make your money back and some. I don't really like UJ, but you definitely made your money back off of just that little loss, and then you could. That's like an easy, like a 1 to 3 or something like that. But the main thing is, don't be afraid if it's a demand or no, basically a demand under demand. You get what I'm saying? So these are both demands right here. Like, this is demand and this is demand. If you see that, don't be afraid to take that first one, and you still got a gap down here. Still take it though. Still take it. Who confused? I'm looking at the chat. Somebody confused. You said the re-entry. So this candle broke. This candle right here broke that high. That would have been an entry. My stop loss literally up under here. It came right back. It literally came right back. Your stop loss would have been right here. Let me put this on so this I can look more cleaner. So if you would have entered immediately, soon as it broke this candle high, let me zoom in so it can make sense. That wick right there, as it broke above, that would have been your entry. It immediately came back, stopped you out, and then you would got back in to make your money back and some. That's going to happen. That's something that's out of my control, out of the market control. The market's gonna do what it want to do. This is UJ, by the way, so it might be on some BS or whatever. But the gaps, all you gotta do is just mainly look to the right hand side. Look to the right hand side of the candle and make sure that there is no pullbacks within that supplier demand. Really, we're gonna focus on demand, only demand. If you look into the right hand side and it had a pullback on that last bearish candle before it exploded, that's low probability. Understand what you're trading. That's all I want to know is what I'm trading. That's it. You know what I'm saying? So take this off. Take all this off. So these scenarios are going to happen when you're going to have supply above supply, and you're going to be like, okay, which one do I take? Take both, because you don't know which one is, like, what was that? Euro USD last week? Euro USD last week had two supplies, high probability supplies. Lost on the first one, won on the second one. It's in the Doyle trade I did. Y'all can check it out yourself. You gotta take both of them. You know what I'm saying? Is it better for confirmation if we wait for the bullish entry in a bearish doji? You talking about these candlestick patterns right here? Okay, so if you want to try to avoid getting stopped out, you can wait for a bullish engulfing on demand. You can wait on that. Now, is that gonna happen every time? No, it's not. And low key, it may take off without you. Like, what was that, Euro USD yesterday? It was only 2 candles that dipped into that. After that, it took off and it was gone. There was no, the engulfing was so big. Now your stop loss big. So it's a give or take with whatever you're gonna do. If you want to try to get in on the engulf, you may have a bigger stop loss. If you want to get in as soon as the candle break, you may have a tighter stop loss, but then you may get stopped out. So it's a give or take. Like it's a give or take. Okay, so let's get into the new material because I know some of y'all like, okay, what's going on? So the new material that we about to talk about is the DXY. We got to talk about the DXY because I use this all the time, especially when I trade Euro USD, and this kind of work on GBP USD, but mainly spot this on Euro USD. So in the morning, like this is the setup that we took Friday. By the way, we went crazy Friday, not gonna cap, but this is the setup that we took Friday. Now, if you're looking at the DXY, really look at these two because they're. I mean, we know that they're the complete opposite. But look at their high probability supply and look at Euro USD demand. Okay, I've been back testing this for a minute. If you have a high probability, like if these are inverse, okay, these are inverse. If they both are at high probability supply and demand at the same time, that increases the chance. Now on this situation right here, it didn't help. But I'm gonna go through some setups and you're gonna see like, oh, okay, so this can kind of give you idea as to where it want to go. You get what I'm saying? So in this situation, when we had to wait this whole time, y'all was in the group chat, we had to wait this whole time until it got into this area. And then we bought right here. DXY never even touched high probability supply. But I'm gonna show y'all some setups and it's gonna make more sense. Okay, so DXY right here, it's the same thing. So we got aggressive buying come out that area, never tapped into the demand, and then it tapped to it right here. Now let's go on Euro USD. Now you see like, okay, I'm gonna do a vertical line. I'm gonna do a vertical line so this can make more sense. My bad. Let me see. Let me line it up. No, matter of fact, I'm gonna line it up when they both touch. Let me take that off. When they finally touch back into it. Look at my crosshairs. Look at where it's at. They both touching at the same time. So if they're both touching at the same time, like you literally line up the crosshairs, that's when it finally touched back into a high probability supply. And this is when it finally touched back into high probability demand. So now we got high probability supply and demand on two instruments at the same time, and they inverse. So if they both inverse, this is high probability demand, this is high probability supply. I'm taking that. I'm taking that because they inversely correlated and they're at entries at the same time. That's even more confirmation. Not gonna lie. Like I've been seeing that like all week. Not gonna lie. Are you worried about market structure when trying? No, no, because you can have high probability supply and demand in a range. It can be supply and demand in a range. Trust me, it can. And if it do break um the demand, it becomes support. I mean, yeah, it becomes support. And the same thing for supply. If it breaks supply, it's just gonna become resistance because we're in like a little channel right there. You know what I'm saying? So supply and demand is everywhere. I'm not gonna lie. But yeah, but no, this stuff is powerful though. I don't know if like this stuff can really help you guide you to see like, okay, what is the direction for Euro USD and GBP USD, but mainly Euro USD. Like I'm telling you, like is inversely correlated. Like you see how this going down, this going up. We got some more setups. Like this is not the only one. Do you demand in the downtrend? You can do a demand on a downtrend. Okay, so if it's a demand on a downtrend, we need market structure breaking. I know I want y'all to write that down. If it's on a downtrend and it's doing aggressive buying, we gotta break some structure because that's dangerous. That's counter trended. If you're trying to take demand on a downtrend, we need some market structure being broken before we take a high probability or low probability supply and demand. I mean on demand. If it's on a downtrend, we need some structure being broken to the upside. So if the DXY and Euro USD get a high probability supply and demand, does it have a whole? Yes, correct. That's what I'm saying. Like we already know that this stuff be hitting. We know this stuff work. But if you have both of these lining up at the same time, that makes it even more better. That makes it even more better. Can supply and demand zone be used more than once? It can. but that second time is low probability. When it touches that first time, it usually hits. I'm not gonna lie. It usually hits that first time. That second time, no, it becomes low probability. Not gonna lie. Okay, so let me show y'all these setups. Because I had these already marked up for this webinar. Okay, so here go a setup right here. Now you see now the DXY is gonna look ugly, but when you get really good at spotting the gaps and high probability supply and demand and stuff, it don't matter what it is. It can be anything. It can be oil, whatever, it doesn't matter. So we got aggressive selling come out this area. We got aggressive buying come out this area. It comes back into demand, but it never come back into supply. Now that don't decrease the chances of it winning on Euro USD. Let me make that clear. It don't decrease the chances of this not hitting on Euro USD. It don't decrease it. But if this did come up here, if this did come all the way up here, yeah, like it's this about to hit. Like I'm telling you, like you can back test right after this webinar. Go back test it. That might be next week homework. I ain't gonna lie. Back test to see when Euro USD and DXY line up perfectly with supply and demand inverse. Like you gonna see it. It's gonna hit. I'm not gonna lie. But yeah, this situation right here, it never reached. That don't mean that this not gonna hit. It just like you know what I'm saying. He uses FXCM. Yeah, I use FXCM. FXCM. All right, let's I know I got another one. I know I have another one marked up. Yep, here go one right here. Okay, so look, here go one that's inversely. We got Euro USD on the left, DXY on the right. Let me stretch out these candles so it can make, you know what I'm saying? Box this in, make sure it's right. Okay, so we got aggressive buying, we got demand on DXY, we got high probability supply on Euro USD. And if you can't see it, you gotta stretch these candles. We never had a pullback. I gotta stretch them because you know what I'm saying? Even if you go a little bit lower, it came out of that area. When it came out of that area, this next candle never tapped back into that zone. Like you gotta stretch these candles out because it'd be like little hidden shit in the market that people don't be seeing. This little engulf right here never came back into that that box. So now it's high probability. And then we got confirmation on the DXY that it's demand, high probability demand. So we got two gaps on two different instruments that's inverse. It's most likely going to hit. And then you see what just happened. It just dropped extremely hard and it went up extremely hard because we touching high probability on the DXY. So that's what makes this stuff even more powerful. I'm not going to lie. So that setup on DXY is at the same time. Yes, it's happening at the same time. Yes, like look at my crosshairs. Like look at both of the charts. It's happening at the same time. That little doji right there is happening right here. So that's just more confirmation. But I mainly use this stuff on Euro USD though. I mainly use it on Euro USD. GBP USD sometimes be moving a little bit different with the DXY because the DXY is the dollar. Like that's the dollar. So if the dollar is going up, euro is going to go down. And if the dollar going down, euro is going to go up. You know what I'm saying? So it's more probability to hold on the SMA now. I don't really care too much about the SMA. But yeah, this is just extra confluence, okay? Extra confluence, Euro USD mainly, and GBP USD. You know what I'm saying? Because think about it. If you got GBP USD on this chart, but we reaching a high probability demand on DXY, that's still gonna move pound though. It's still gonna move pound. Like you gotta like think things into perspective. If we reaching demand on DXY, the pound is probably gonna drop too. You get what I'm saying? Like let me just go to let me see. Let me just go to one. The same thing. The same thing. Let me go all the way back. Now again, like I said, Friday it never touched supply, but we was at a high probability demand, but it wicked at the bottom, so I didn't take it. But this is still confirmation though. Let me see if it's another setup that happened at the same time, so that can make more sense. But you got to understand that GBP USD is still gonna move a little bit different compared to Euro USD. Do you use any indicators or just pure price action? I have some moving averages, but I don't really use them in the morning. I just take them off so I can see the whole market clearly. Let me see. Take this stuff off. Okay, so it dropped a little bit, but you see the difference though. Euro USD is like a mimic of it. GBP USD, it may mimic it a little bit, but then it's gonna do its own thing. You know what I'm saying? It's gonna do its own thing. So I would mainly use this for Euro USD, like mainly, because it's not like an exact mirror of it. Let's see. Mm. Okay, hold on. We got high probability supply right there. Let's see. Okay, that's supply. Try to line it up perfectly. Yeah, that hold on. There it go right there. Okay, I couldn't spot it. So this is the demand right here. This is the high probability demand. And right here, it never tapped into it. This is not even really correlating with GBP USD. It's not. Let's keep it a buck. This is not even really lining up with it. But that's why I said use DXY to see if it is high probability supply and demand on DXY. Because if it is, that's gonna adjust GBP USD. Now it's not gonna immediately move the total opposite because like these are not like completely the opposite. It's really Euro USD. That's what it really is. I'm not even gonna lie to y'all. It's really Euro USD. But this move with the dollar too, but you know, they just opposite. Let me see if this ever. So right here, that's a buying. See, this should have been supply right here. You see what I'm saying? Like this should have been supply right here. That should have been supply, but it didn't. It wasn't. If you line up the crosshairs, that should have been supply over here. Never tapped into it, but it's demand over here. I think, I think that what it is. Yeah, man. Don't let me get really good at this shit. Yeah. So USD to match with the XY. No. Some days it's not gonna. Let me go back to Euro USD. Some days it's not gonna reach it. So let's go. So this was Euro USD yesterday that we took. Let's go back. This was the high probability supply. I'm only saying to pay attention to the DXY if entries are lining up at the same time. That's what I'm saying. That's what I'm saying. So if it don't touch it, I'm not saying don't take this. Like we taking this right here. But say if this did come all the way up here, if it do come all the way up here and it start dropping and then this start going up, that's a dub. Like I'm not saying it's a guaranteed dub, but I'm taking that with confidence because we both supply on DXY and we on demand and they both high probability and they both got gaps on it. Like, come on, like you know what I'm saying? Like, come on. Do you ever combine? No, I don't trade fibs. I don't trade fibs. So that's the main thing that I wanted to add. I wanted to add DXY. I'm not gonna lie, because I've been using that a lot, especially on Euro USD. Especially on Euro USD. Not gonna lie. Do anybody have any more questions? Any questions? Because like we like every week is going to be kind of the same thing. I just want everybody to be up to speed. Like high probability supply and demand gotta have gaps. Low probability don't have no gaps. Support and resistance mixed with liquidity graphs, the same thing. GBP correlated with USD CAD for whoever was asking. Yeah. Do DXY work with gold? I don't trade gold. I can't speak on gold. I can't speak on gold. Real quick, how do you show multiple charts? Do you have the paid version of TradingView? Because if you don't have the paid version, it's over with. What pairs should we be back testing if we only trade gold, all major pairs, and indices? And the main three indices, because it's other indices like JER30 and stuff. I only really look at NAS 100, and I used to look at SPX 500. I don't touch US 30. Do you take low probability supply and demand? Not really. Like I think I took one low probability supply and demand on Euro USD like the first week we opened up the group, and I didn't. I like. I don't want to. I don't want to lose. I'm just gonna keep it a buck. I don't want to lose. What's your forecast for NAS? I'm trading what I see. I'm not forecasting. I used to do like, oh, I don't have a bias. No, I'm trading exactly what I see. especially during this time. Don't be trying to like predict. You know what I'm saying? Like, oh, it's this whole week. Nah, just trade what you see. Is there indices that work with DXY? Um, I don't want to say yeah, and I don't want to say no. I just mainly just trade NAS 100 exactly how I just traded, like just the chart. Can you give me a few examples of trade support and resistance? That's gonna be for the homework. I'm not gonna lie. That's gonna be for the homework. I don't want to talk about that right now. Today is just strictly just demand and talking about how you can mix DXY to increase the win rate. That's already a high win rate. Like we be winning on these high probabilities, like no cap. Like we be winning for the most part. So no more open interest. No, yeah, the open interest like on the barchart.com, like yeah, look at that. But even though it may be pointing down on the barchart.com, it still may drop. So that's why I say trade what you see. If they're conflicting with each other with the fundamentals, just trade what you see. That's the best bet. Just trade what you see. This can only be used in supply and demand too. What you mean? You talking about the DXY? The DXY is inverse. So whatever, if you're trading something that's different and the DXY is setting up and Euro is setting up for your setup, you can take it. That's just more confluence. What's your main reason for leaving runners? That's a fast way to grow your account. The one-on-ones is just to maintain a profitability, but the runners is going to grow your account. Trust me. You leave a runner all day, especially like if you leave a runner on NAS 100, it's going to grow your account. How was it trading Q1? Q1 like after at the end of January, it's just going to be like regular clean setups, regular just trending. Like you can leave NAS all day. You know what I'm saying? Leave it for like noon or like 1 o'clock. It's gonna be easier. Trust me. Will you make a video of how you can actually follow your rules and not break them? Oh, I think you asked me that already. I got it written down on my whiteboard. That might be a YouTube video for sure. So like any more questions though, because this webinar today was not going to be long. I just want to just go over the homework a little bit, talk about the gaps. Um, a runner is when, okay, so it depends on how you want to do your runner. I enter my trades minimum twice. So I'm twin trading. I close one position and leave a runner. Lately, I've only been going for 1-1. I know y'all been noticing that. Like Doyle don't even be leaving runners. I haven't been leaving runners because we're in Q4, and I don't really care about taking all the money in this month because I've done good all year. So it's just like I don't need to do all that. You know what I'm saying? NAS chart on FXCM. I think this is Owanda for NAS 100. Yeah, I think this is Owanda. Yeah, yeah. I haven't been leaving runners, but I'm definitely gonna be leaving runners next year for sure. How much often is high probability versus? Okay, so high probability. You're gonna see them, but if you don't see them in your trading day, like you just gotta just trade. Like honestly, I don't know. Cause like some days you're gonna see them a lot, and then some days you're just not gonna see them. So you're gonna have to trade like regular breaking retests or liquidity grabs or like real time support being created. It just all depends on what we seeing for the day. Like we're not gonna always keep trading high probability supply and demand. That's why next week homework gonna got nothing to do with supply and demand. Like no, because it's gonna be some days where you gotta trade breaking retests. You gotta trade something that's being created at that moment. You gotta just be ready for it. You know what I'm saying? How can you make a good trading plan? Uh, I mean, I got a trading plan on like I got a video on YouTube about making a trading plan. This question may be already asked. The Discord, have you thought about separating channels by indices and and currencies? Not really. I'm gonna keep it a buck with you. Not really. Is it wise to spend the entire New York session waiting for setups? That's part of trading. Not gonna lie, it's a waiting game. I can sit here for 4 straight hours not do a thing, and that's part of trading. That's the thing that sucks. You gotta show up every single day, even if you don't do nothing. You still gotta show up because you don't know what's gonna happen. Do you use trading journals? No, I got a Telegram channel that I put my wins, my losses, and I just like put little notations down just to see, um, let me avoid these setups, let me take these setups more. You know what I'm saying? That's why I named it high probability because the win rate is so high when we trade the supply and demand with gaps. Because I just know they hit. Why did you mark up New York gap open and not London? I'm only marking up the current gap. Like I'm not even gonna lie, the current gap. You talking about on NAS? What you talking about? What's the best leverage for a $400 account? It depends, bro. Cause like I just flipped 400 to 1,000, and I had a 1 to 500. I was over leveraging. It was just a flip type of video. So like, if you're not trying to blow that, like just do like a 1 to 300, bro. Yeah, definitely screenshot your beautiful setups and screenshot setups that you keep losing on. When you keep losing on setup, stop trading it or make a bigger stop loss. Because sometimes you'll have a win, but your stop loss be too tight. You want to chart at 9 Eastern? Yeah, at 9 o'clock Eastern Standard Time, I'm at the chart. What time do you go? Yeah, 9 o'clock. I'm talking about the chart in front of you. I didn't take this setup. This is from Friday. I didn't even trade NAS, so this don't even matter. None of this matter. I didn't trade NAS. We all took this setup right here. This is what everybody took in the group. Everybody took this setup right here. You trade all day. I only trade from 9 a.m. to noon Eastern Standard Time. 3 hours out the day, and I'm done. And I show up tomorrow. It's literally like a job. Why does Q1 begins? Q1 begins because it's a new quarter. Q4 is like, even for businesses like Walmart, like they're trying to make the most money. That's why Black Friday exists. They're trying to make the most money 40 years over. You know what I'm saying? Then the year starts over. At Walmart, any store, like they have to pay taxes in quarters. You know what I'm saying? Can you please repeat what makes supply and demand valid? Okay. Do you still do one-on-ones? Yeah, it's on my website. All right. What makes supply and demand invalid? This is just very, very simple, but we gotta get this. Oh, this is also I wanted to talk about right here. Right here. Before I get into what makes supply and demand invalid, this is what I wanted to talk about. Where is this at? Right here. Now, okay, this right here. This is supply right here. We off topic. I know we off topic, but we gotta talk about this. This is supply right here. I want y'all to really understand this. Like, this is supply right here. You want to mark up your box right here. Now, this is a 2 candle supply right here. 2 candles. Just 2 candles. The very next candle tap back into it. That would be an entry. I don't like these setups. Now, is it following the rules? Yes. But I don't like these setups. I'm not gonna lie. I don't like it. I don't like it. Now, don't get me wrong. This could definitely be a dub, but I don't like it though. I don't like when it's just 2 candles. Now, am I preaching don't trade these? I'm not preaching that. If you want to trade them, you can trade them. But me personally, if I see something like this, I'm probably not touching it. I'm not gonna lie to y'all. Facts. Do you gotta do a Michigan meetup before you move? Oh no, I'm not gonna lie. It's been see now we gotta talk about some personal stuff. No, it's been crazy. I'm not popping out nowhere until I move. Not gonna lie. Not even gonna lie with none of y'all on this live right now. I'm not popping out till I move. So y'all gonna have to come to Florida. So once supply and demand becomes support resistance, would it be a high possible zone to bounce off out of? Hold on. What's supply and demand becomes support resistance? Yeah, when supply and demand becomes support resistance, just trade it off the wicks. Delete the box and just trade the wicks. So like, let me see. So right here, say if it blasted through this demand box. If it blasts through that demand box, if it blasts through this box and it start wicking above, now they're just doing liquidity grabs. So let me if this just start doing something like that, but the body is not closing above. It just like, you feel me? It just wicking and then it finally start dropping. That's valid. That's just resistance. And really it's just a liquidity grab, but we're just gonna call it resistance. I want to keep everything simple. So that's all I really want to talk about today. I'm not gonna lie. Definitely when you trade Euro USD, please, man, look at the DXY. It's gonna give you way more confidence. Trust me. That trade that I took on Friday, it didn't touch my supply box, but it gave me confidence. What if the body is between the lines? It's still valid. If the body, let me go back. That's a good ass question too, because some people are like, I thought it was invalid. That's a good question. Say if the body closed, say if the body closed right here in the middle of the wicks and then start breaking, it's still valid because the body is not closing up here. If the body is closing above the wicks, it's letting you know that they don't care about that area. They want to continue up. They want to continue up. And literally on NAS, literally on NAS 100, this happened. This This little wick right here, it closed above, or even if you drew your box like this, it closed above. It's not valid. This body right here closed above. So now that level don't matter. You're deleting it because it closed right there. What account balance you need to make a living off of this? What is your expenses? What is your expenses? You got to answer that. So would the supply be low probability if the wick out the box? You talking about what you talking about? This setup right here? Though explain the long wicks and support and resistance. Can you explain or do a video on how you trade your desktop like settings? I might do a YouTube video on that because people be like, how you set up MT4 on your computer? People don't know how to do that. I might do that. So if the body closed, so if the body closed in the demand box, that makes the box invalid. No. If the body closed in a demand or supply box, doesn't matter. Long as it's not breaking out of the bottom. This right here, that is invalid. This is invalid right here. This is invalid right here. It tapped back into that gap. This whole candle created a gap. Never tapped back into it until it came right here. Once it came right here, it blasts right through it. This is invalid right here. Put X right here. That's invalid. If it just tapped into it, where's the line? If it just tapped into it like right here and then took off, now it's valid. But it just broke the whole box right here. It just broke it. That's invalid right there. Do you still use 13 EMA for runners? I haven't been using no runners all month. I'm not gonna lie. I do use that though. I do use that, but like I haven't been using runners at all. Cause I just wanted to take my money and go. How many trades do you recommend a day? I'd say one or two. But see, this is the thing, man. This is the thing. Y'all gotta get a larger account. Y'all gotta get a larger account. That's what it is because I'm only taking one setup a day and making 1,500 off of just one setup. Y'all want to constantly keep trading? Like, no, that's how people blow their account. Can you explain entry, please? Entry off of what? This is an invalid setup right here. This is an invalid. This is not a setup. How much do you recommend for as large accounts? Honestly, are you trying to make a living off of this, or you just want to just make this a side hustle? That's what you got to understand, because if you're trying to live off your forex profit, you need a lot of money. I'm not going to just come on here and lie to anybody on here. 3 trade a week for a month, 1K each is 12K a month. Oh, okay. You said make a living. Honestly, you probably need. You're trying to make a living now. You got okay. I don't want to put my situations in it because I don't have no kids. My bills is very low. Exactly. Minimum 25K. Minimum. That's minimum. If you're just trying to like, you feel me? Now, if you're trying to really like have $1,000 days, like where you don't have to trip about it, you're probably gonna need a little bit over 50K. A little bit over 50K. So that's why people get funded. That's why people get funded. That's why people get funded. If you because you cannot live off of Forex 5,000, 10,000. No. You're gonna over leverage one day. You're gonna over leverage. You need some funds. You need funds. You can't do $1,000 in a day and you only got 7K. You can't. No, don't get me wrong. You can, but you're over leveraging. Let's keep it a buck. You're over leveraging. So if you don't have capital and do it, will you make a lifetime purchase for you? I'm trying to buy that. No, I'm not gonna lie. No, I'm not. Your basic expenses can't go over 5%, and that's another thing. Like your standard of living. Where are you from? If you live in LA, Miami, New York, you definitely need like 25K in your account if you're trying to. That's minimum. Like LA, come on, I'm in Detroit. Like rent ain't even expensive here. It's not. I'm already prepared. I know I'm about to be spinning a bag in Miami. I already know. It's not a game. So you gotta have money in your account. That's why people get funded. Bro, why is it so windy, bro? But I guess I'm gonna end this though. Let's nobody got any more questions though. This is an invalid setup. On demand, if it breaks the bottom of the box, it's invalid. It's invalid, okay? Invalid. Same thing for supply. If it break out of the top of the box, it's invalid. Now, do we give up on the setup? No, because this can turn into support or a liquidity grab. The same thing for our supply. The same thing for our supply. Okay, but yeah, definitely look into that. Like if you trade Euro USD, look into the DXY when you're looking at it and see if it's a correlation with supply and demand. If they inverse, if they both lining up, take that. Because I'm taking it. You don't gotta take it, I'm taking it. For real. What if Wix but close inside the demand box? You're good. What you mean? Like, you know what I'm saying? If it wicks into the box and then it start going away from it, that's valid. Oh, you talking about wick at the bottom? Are you talking about wick at the bottom? Oh yeah, if it wick at the bottom, invalid. It's over with. But that can turn into support though. You know what I'm saying? It can turn into support. So right here, this is a perfect example right here. Before I get off of this right here is high probability demand, right? Now this was news. I know this was news because this was 8:30 on Friday. Yeah, this is news. It dipped into that box. This box is instantly invalid because it dipped the lower that high probability demand. Let me stretch the candle so y'all can see this. Aggressive buying. This is a 2 candle one, but we got a little pullback, so this is valid. It dipped below. That's invalid. So you're gonna take that off. But we got a smart money engulf and it's at resistance right here. And remember what I said, if you got a bunch of wicks at the same area, just go to the median. Try to get all the wicks. So I'll draw mine like this. It dipped down and broke above, and you would have bought immediately as soon as it got right here. That's what I mean where supply and demand would turn into support and resistance. But this is really just a liquidity grab, to be honest with y'all. This is really just a liquidity grab to just grab that low to go up. And then you could have just took that. So that's how high probability demand can turn to support, but it's really liquidity grab. So what if we see a high probability demand on a downtrend? Are we taking it? It have to break market structure. Okay, it have to break market structure to the upside. I would not take a demand on a downtrend. I would not take a demand on a downtrend if it's not breaking structure. It need to be breaking some type of swing highs. It have to. When should a trader create an LLC? It depends. How big are your withdrawals? How big are your withdrawals? Because you can still trade forex without a LLC. You know what I'm saying? No, I never use Hango Trade Bonus. No. Yeah. So like you can trade without an LLC, but you're just gonna be paying a little bit more in taxes and you can't have an S corp, you know what I'm saying? So anything I honestly I'm gonna keep it a buck. If you're withdrawing more than 5,000 a month, LLC. LLC it up. I ain't go I ain't gonna cap. Only when you're consistently profitable. Yeah, exactly. If you're consistently profitable, LLC for sure. You do not want to play it because they're gonna be. They know traders making money. They know. Hango Trade look like a dial up on my account. Why you lower your leverage 1 in 300? Because when you get a bigger account, you don't need 1 in 500. You don't need it. So that's how you pay your taxes. No, I have my CPA. My accountant handle all my taxes. I don't know how to do this stuff. I'm new to full time trading. I literally quit my job this past April. So I hired an accountant. Like, okay, handle my business. Same thing for S corp. Like, I don't. You literally have to call my accountant. Like, I'm not knowledgeable in that. You have to talk to your CPA in your area. I'm not a. You know what I'm saying? Why didn't you take Friday GU setup? Okay, let's go to Friday GU setup. I didn't take Friday GU setup because it became invalid. It's that simple. I'm following my rules. That's why I literally just took EU and I played 20 lots. I played 20 lots. So aggressive buying, and then it tapped into the low of that. Once it tapped into the low of that, I immediately deleted the box and I was looking at Euro. Immediately, because look at this one. They had those was both of the same setups, but it respected this setup. And you see which one did better. We see, I mean, they kind of did the same low key, but I was confident in this though. This looked more cleaner than GU. That's why I took Euro USD over GU. Okay, but that's probably gonna have to be on the next one because we got like 1 minute left. Any last questions though? I can't do that one right now. You said it wasn't invalid. Oh, I'm glad you just said that, Andrea. When you're looking at your candles on MT4 and TradingView, focus on TradingView. Focus on TradingView because MT4, the coordinates are going to be off. That's for any broker. They're never going to be the same because the liquidity provider that we're using on Forex pairs is FXCM. Hanko Trade, Hugo's Way, I don't know, any other broker is going to be different. It's going to be different. So the numbers are going to be off. The candles are going to be off. You know what I'm saying? Like it's going to be different. So I will just focus on what I'm looking at on TradingView and then enter my trade on MT4. Just entering it. Don't really try to make everything perfect because all this is just for us to lose money anyway. They don't even want us to win. So you got to be able to play with their game. They're like you may see a long wick on MT4, but there is no long wick on TradingView. You get what I'm saying? Like so, it's already built for us to like lose. So we have to play with their game. So you always get in with 20 trade orders? Yeah, always. I'm always entering twice. Tips on getting funded. Can you make a video? I can make a video. Is there more people losing? Yes, yes. Trust me. It's a trader quitting every single day. All right, I'm gonna get off of this. That's all I got, man. Make sure y'all look into the DXY when you trade Euro USD, please, because I'm telling you. No, I never even tried a challenge. I'm not even gonna cap. All right, I'm about to get off of this. Y'all have a good weekend. Monday, we back into it. Homework on Tuesday for sure. You know what I'm saying? This was just a short webinar. Like I ain't want to go too crazy. Next week we definitely probably gonna not do supply and demand. Gonna do some regular support resistance, liquidity grab homework. You know what I'm saying? For the people that missed the homework, I don't want to hear it. I'm gonna say it every webinar. I don't want to hear it, bro. When y'all start losing, what's going on, bro? What's going on? I'm just saying. All right, y'all have a good day.